Hello everyone, welcome to my technical analysis video. It's my first time doing one of these videos, so I apologize if I speed through things or jump all over the place. There's quite a bit to cover, so I'm gonna try to keep it organized. So to start, you guys should have a little bit of a background on some candlesticks, trend lines, trends in general, bullish and bearish patterns. Uh, like if you're really confused on the basics, there's a Udemy course I suggested, which is like $10 to $15. I used it when I was getting started, and it was very helpful to learn the language that some people like me and Mapleweed or anyone else, any other technical analysts use. So you might want to get familiar with those if you aren't already. So we're going to talk a little bit about my trading strategy, a little bit about the more technical language we use, like what the lowest gained, and more specific in patterns and stuff that I look for. I'm not sure I'll be able to explain it completely clearly, but I'm going to try my best. Um, So first off, I want to say that I have a bias towards trading when stocks are red, basically. I don't like to trade stocks that are green, that are running for weeks straight, or are even green on the day. I rarely trade uh, stocks that are like already in an upwards move. I like to catch a pullback. I like to catch a dump even for quick trades. Even when it's like a long stock, a stock I want to go long on, uh, I still always try to catch a pullback. Uh, to me, it has the best risk to reward. You can have a nice stop loss if you get in at the right entry. Um, so yeah, I do have a bias towards buying oversold stocks and things like that. So if like I don't have anything against traders who like to buy breakouts. Everyone has their own forte. Everyone's good at whatever they're good at, But it's just my preference, and so just keep that in mind when listening to this video. So I like to buy on max pain scenarios where the stock has been oversold for um, several days. So several days, and basically when a stock is very oversold and all the panic sellers are out, it's really reached that critical level that it's got to bounce at, basically. And I don't just trade these on any stock. I like to watch stocks that I know how they trade, like Canopy, all these pod stocks I watch all the time, so I know which ones are strong, which ones whose dips will be bought, which ones could fall further, which ones, you got to stick to the stocks that you know and understand uh, when looking for a trade, basically. I like to trade short squeezes, even long squeezes. If stock looks like it wants to go down, shorts squeeze longs or long squeeze shorts. That's basically when how dumps or pumps happen. Um, so let's say a stock is completely oversold for a couple weeks and it's forming like very nice patterns showing strong signs of accumulation. That means that that trend that leg down was caused by, well, not caused, but it was abused by shorters. Shorters took advantage and made money off that, and basically they're at the decision point where they need to either take their gains or ride it further. So if the if it looks like it's going to reverse and go back up, these guys need to cover their shorts, and that's basically what a short squeeze is. Even though most of you probably already know that, but I like to trade those types of setups because they bring in the most liquidity. You need volume for these setups to work always. These if there's no volume in the setup and liquidity, it won't go as planned most of the time. It really you need that demand. It's all about supply and demand in these types of stocks in play. So the volume is completely key. Like I don't go into a trade if the volume isn't there or above average, or if I don't, if I think that I'm just gonna buy and the volume won't come in after me. You know what I mean? So um, volume is definitely important. Um, Aside from that, I do like buying some breakouts, or what I usually do is buy the retest of a breakout. So let's say the stock is in a triangle pattern, uh, an ascending triangle, for example, and it breaks out. Um, some people just go long as it breaks out, as it's breaking that key level, but a lot of times there's fake outs, and you could get like destroyed in one of those, like in the matter of minutes, where they pretend like they're breaking the trend line, but it's only to make that liquidity rush in, and then they dump the shit out of it. So you really gotta watch out when buying breakouts. That's the reason why I don't like to buy breakouts, because there's just so many traps, and it it's not my thing. So I like to buy on the retest. Like even when the stock does break out, it almost always retests. It needs that fuel. Like let's say the stock breaks out and then comes back. Like it's really that time, now or never, for people who weren't watching the move before the breakout and now have an opportunity to get in. That's the spring that'll shoot it back up. But it always depends on how strong the stock is and things like that. So um, we're gonna talk about what the lows gained and what the highs lost, because I know a lot of people had questions about that. But try to go over that first. Um, so here's Apple's chart. Been on a huge upswing since 2016. Went from $90 to 230, and now we're just chopping around nonstop. It's like honestly amazing for traders, terrible for longs, because they're just panicking. They have no idea what the hell they're doing. Um, but these swings are insane. Like you could make money on so many stocks right now. It's incredible. But so looking at this, these are the lows. This is the breakout down here. It was a wedge, not a falling wedge really, but a triangle. These were the lows here. It broke out, always retests, springs back up, retests again, filled the gap, sprung back up. So it went on and on, consolidated for the moves higher, you know. Then this was where it was really getting extreme, like from 160 to 190 consolidated from May to November to, so yeah, from 160 to 230 in a matter of, in less than a year. So it's pretty insane. So when things like this happen is where I get interested, because once you get to this extended part where it's like, okay, wow, like, is it going higher or is it gonna tank from here? Like, are people gonna take profit or not? So here's where it gets interesting for me, because it's one or the other. It's not just gonna like stay in this zone forever, it's either gonna break down or break higher. So here's where I really get interested. And I was actually watching this in October 2018, which is when this happened. And I was playing calls, puts. I was a beginner in options back then, so I was like I still am now. I'm not the best at options, but I play the chart, so But yeah, I was playing this move, and I never actually ended up buying these puts to call this move, but I I foresaw it all coming basically. So actually, one thing I should go over first is my favorite patterns. Um, my favorite ones. There's like plenty of patterns. There's a bull flag. There's triangles, ascending triangles, double bottoms. There's plenty, but my favorite ones that I can predict and have the most powerful moves are falling wedges and head and shoulder tops. Well, reversals. So here's like a textbook head and shoulder. Like, it doesn't get more clear than this. Um, so this was the first high. Actually, if you look at just this move, it's one leg, consolidate two legs, consolidate three legs. The third leg is where like things get extended, and even on the short-term trend, you're gonna want to retest this range or whatever range in this leg. People are always gonna take profits as it's when it's that extended. Um, if they don't take profits, it's basically a parabolic stock, and it's gonna end very badly at some point. You can go like as high as it wants, but the quicker it goes up, the more brutal the ride down will be. So here's the head and shoulders. Um, Also, the main indicator and pretty much the only indicator I care about is RSI. Um, there's MACD, which is very useful too to look at momentum. There's Ichimoku clouds, which I can show you. It's like to predict the where the next bounce is, and things like that will be like you could see it really respects this blue line, for example, at this point. Retest the cloud. The cloud's always the support or resistance. So here, as it's going down, you might expect a bounce in the cloud. Um, Tries to break back up, gets rejected, falls out of the cloud, retests the cloud, dumps again. And then here, as it's downtrending, it just can't get over that blue line. Um, and as you see here, it reclaims the blue line, which is there's just moving averages, and that's the new support, pretty much. Like, I do use this in some cases, but not all the time, honestly. So how do I get rid of this? Okay. So RSI. What is RSI? What does it tell me? It basically, I just look at it to tell me uh, what the strength of the buyers and sellers are at that given time. So basically, what I see here is this top RSI was 85, very overbought. Basically, anything under the in the black ranges here is overbought or oversold. So look at this. See 230, the high, and RSI is overbought. Then consolidates. Here I'm still just watching. I don't really make a move until I see something like really clear. But unless it's an intraday move and I'm trading the weekly, but we're gonna talk for longer term here. Um, so it hits this high, RSI is at 85, then it consolidates, goes for a higher high, which most of the time is just to liquidate people because they see that, oh my god, it's breaking over the all-time high again, like it's gonna go for another run. But this is where the bull traps are. This is like disgusting. Like, imagine buying here for a long because you think it's gonna go higher, and next thing you know, you're down almost 50% from 230 to 140, because that's no joke. So always gotta be careful buying breakouts again. But what I see here is a top here and another higher high here, but the RSI went from 85 to 65, 67. So that just means that as this went for a higher high, the sellers were just like down ticking this thing like non-stop, like getting rid of it. And that's what the RSI tells you, is basically how much people are slapping the ask or slapping the bid type thing. So you see here that people are just slapping the bids, like they just want to get the fuck out as this is going for a new high or liquidating their positions. So this is very bearish, and right away this is my number one sign when something is going to reverse the uh, this is a bearish divergence. You could see a bullish divergence probably in some cases right here actually, but I'll go over that after. But bearish and bullish divergence really give you the strength of these new levels. Like you can clearly see here, it's gonna get destroyed if you were paying attention. So this is a head and shoulders. So basically, you think of a human, which is a shoulder, shoulder on the right, and a head. The head always has to be higher than the two shoulders. The shoulders could be at the same height, or they could be, different a little bit. Gotta give it some leeway. So this is the head dump, which is the exact all-time high. So what the basic rule is for head and shoulders, which I don't always go by because it really depends on the stock, is the dump that was produced on the head is gonna be the same. It's gonna have the same strength on the way, like on the breakdown. It's gonna be the same measured move. So let's say here it probably went down 230 to 211. That's $22. Broke down from here 212 to 193. That's $19. So it's like you know that this head and shoulders is gonna lead to a move this big at least. So, and this is also lines up with a perfect target right here. It's the like this. You could see some support, yeah. Like I guess you could say there's some like over here. It bounced several times over here, reclaimed it, and whatever. So you could argue that there's support there. That's why it might cause some short-term bounces. But if you look at this leg, there's really not much consolidation, not much sideways action where they really like built up the support in that price. So it's like kind of useless levels. Like it could easily blow through these. Then you see here that it was like tested more than once. The buyers are going to try to defend this level as it's dumping. So in this case, before New Year's was fucking disgusting. So um, they brought it to like a 45% retrace or something like that, 40%, I don't know. But your target basically for this head and shoulders would be this measured move. But it just like head and shoulders and falling wedges really tell me how strong the reversal is going to be and what to look for basically. And they're also the clearest patterns that I like to trade. Here's like a little bit broken, but another head and shoulders. Like, and you zoom out, like this is the neckline, by the way. Head and shoulders, just the shoulder, head, shoulder, and then there's a neckline where it's been holding. As soon as that falls, it's like goodbye. So here you see that this is another key level, and I found support here. Very interesting. So basically, quick uh, introduction to what the lows gained and all that. I don't really care. Like basically, there's so many lows and highs that were gained in the whole chart. Like every single day, intraday, there's levels gained and lost. But when I like really start to care about it is when it's in like this situation where it's like do or die. You know what I mean? So you really gotta pick your situations wisely because you could be putting support emphasis on something that is not really that significant. So um, the lows gained and lost is something I look for when I'm looking for supports. And let's say here it was extremely extended oversold. And first thing to note, by the way, is a very bullish divergence. So lower low, well, low of the move is at RSI is at 23. Then it gapped down to 141 that day. I forgot why. I think it was like a fucking downgrade or something. And the RSI raised to 28. So that means just means buyers came in much stronger on this low, essentially. So let's say it's gapping down to this level. You're in the situation where it's like you're here. The days where it's gapping down to that level, you want to look all the way left to see where you are. Like here, you could argue that this was a low that was gained. So you see it broke down here, consolidated, pushed back up, and it caused this whole rally. So this is a key level for sure. 164, which did give it a nice rally in the first touch. 162 to 172, it's $10. So these levels do get reactions. These are the levels that are gained. And let's say this right here, let's say here, dumps. This is the consolidation. Gained this level because it pushed way over it, right? And then here, when it does retrace off this move, like yeah, more bearish divergences, like it just needed a retrace. So and it always looks for a target that the leg started on. That's what we talk about when we say what the lows gained and what the highs lost. So here this leg started on this, so we might want to retest the whole start of the leg. That's what we mean when we say for the retest. So it held this level perfectly, bounced again, then so yeah, caused another leg up, another top, bearish divergence again. It's really not hard to see. And then once again, I had to retest where the leg started, which is what the lows gained, which is this level again. Bounce right off it, caused a huge rally again. This low gained something because it consolidated here. I would say you could add a level here where it gained even maybe. It's a bad example because it wasn't a perfect touch type thing, but let's say this neckline right here, 215, right? It goes all the way down to, well, by the way, this is like, I forgot to say, when you're in the gap down, you want to look all the way left. This is a very significant level. Like you can see that it broke out, retested, came back under, broke out again, retested, stayed over what we gained, and then broke out and started the whole rally. So now you see that it's gapping down to this level, and you see that buyers might come in strongly. You know, you take your trade here, you just buy it. You need to trust the chart. So you take your trade here with a stop loss, let's say under these levels. This level right here is another level gained. There's plenty of levels gained. You need to just look at look at them and use them to your advantage. So this level here would be your stop loss. Perfect round number, 140. Market makers like to look for round numbers because it just, I don't know, it just works. So yeah, you take your trade here, go to stop at under 140, you're risking 250 or like $3, let's say, and like your risk to reward is massive because when something is gonna bounce, it's gonna bounce to the next level that it lost. So here's where all these levels come into play. Um, I have another one here just for the fuck of it, but so you take your trade here. Now you're in, right? Starts to bounce. It's looking good. You look for where it can get rejected next. So here's the. Let me zoom in. You can go on a smaller time frame. Here are all the levels. Sorry if they're different colors. Confusing. Um, so yeah, you're in the bounce. You see it is showing like strong signs of buyers coming in. They're buying this dip. There's a bullish divergence, like a strong signs of accumulation. So you know that this could rally, but you gotta like expect some indecision because like the buyers must be scared after all of this basically. But it's basically a do or die scenario. This is where short squeezes happen because shorts took this whole move down. They rolled like insane profits, so like it's time to take them, right? So you're in the move, it's pushing up. You really got to look for like it's better to look for the significant ones, but I look at sometimes more than I should even. But it's good to watch all the important levels. So here you see it broke this one first, held it, this low here. It held it, pushed higher, broke this level, filled this gap from here. Took a little retrace, held this level, pushed back up, ticked even higher, came back down, and here like what was the lows that were gained is another example here. Like say you retrace here, this is your low, it pushes back up. That's a low gained. If you're looking at shorter time frames too, like that's how it works. So pulls back and held again over these lows, which is just bullish in general. Like buyers coming in stronger and stronger every time it pulls back. So then it pushes up. You got to keep watching these levels, and let's say this is the level the gain didn't cause the push up. You just set your stop loss over here now. Let's say you were in at 142. Now you just set your stop loss below 150. Like even let's say you're in this move, you bought here, and you missed your sell, or I don't know, you want to hold higher. You just set your stop loss below what was gained, and it should hold if the trend is bullish. If it doesn't hold, it's probably because it is bearish most of the time. So just take your stop loss. So yeah, keep watching the levels, keep raising your stop under the recent levels gained. Look for the significant ones. Like this massive leg started from here, came all the way back. Sorry, went all the way back up, retested. This was just insane, like really textbook. So head and shoulders here. This is the level that was lost. 215, like extremely significant. Dumps all the way back down. Another head and shoulders. Reversal off this neckline. Comes all the way back up for like a huge rally. I don't know how much that is in percent, but touches the exact high that was lost. Like it's not rocket science that the chart always works. Like it's just the way it is. Touches the exact low, retest what where the leg started, what the lows gained on where the leg started, which is, you could argue here, you could argue the exact tick if you look at shorter time frames just to see this level. See this bull flag, this bullish impulse. This is the low that was held, 171-ish, 172, and that's exactly where it held here. The exact tick was down here, which is like perfect 170, even a round number. And so it always wants to retest where the leg started, what the lows gained. That's what we mean. Um, you could look at it like, let's say you're in a range. You could look at it also like, could say this is what was gained on this consolidation. So that's what held here. You know, moves up higher. That's what held here. Moves up higher. It's too extended. It did hold and went higher, but it was too extended and dumped. Here again, this is the low, pushes, retest the low, higher, goes again. So yeah, getting a little repetitive. So that's basically what I look for. Now I'm gonna go over a few setups that we played and you know, just things, charts in general. Started off with canopy. A little bit of a mess, my chart. Sorry if it's messy. Um, so I this is one stock I've never played, even though I was watching it fucking at $10. I wanted to go for a long-term investment and it never happened. I suck at fucking investing. If I tell you to invest in something, don't listen to me. But yeah, so I missed this entire move. Every one of them. Every time I pulled back, like this is when I was still a noob. I would just be like, okay, is it gonna bounce? Like, not even looking at the chart, nothing. So whatever. This is in the past, and these swings were just like massive, and they happened all the time. So um, at this point, like through um, this whole move, I I was watching everything. I was getting good at technical analysis, actually even here too, and so I started paying more attention to Canopy. This is why I played it this month. Um, so like you see it every time it gets to those oversold prices, like extreme leg down, bounce. You know, extreme leg down, bounce. Extreme leg down, bounce. Extreme leg down, bounce. Like it's like huge moves too. So this is why I really had to pay attention. Um, so you know me. I like falling knives. Um, I like to buy when it's extremely oversold. Like thankfully, I never got caught in any of these candles here. Never took any trades on Canopy. I literally never went long on it besides for intraday moves, like where I tried to flip for a few dollars or whatever, but like never made any gains or any losses on this stock really. But I was interested here because we were on an extreme leg down, and I've been interested ever since we lost these highs, basically. Um, Here, as you can see, the bearish divergence. It's a higher high with a lower low on the RSI. Um, so I wanted to trade this because whenever I see huge consolidation, which in this case was huge distribution, so is this up here. This is huge accumulation, huge accumulation, um, huge accumulation, I believe. Anyway, um, so yeah, this is the consolidation levels that were lost. So 52 bucks. Like I would say, this is the base that really caused the breakdown. Well, actually, yeah, yeah, I would say that, or even here, 59 bucks could be it. Another possible target for this run if it happens. But 58 bucks, another level that was lost. So basically, I look at all this consolidation, and that just means that so many people took trades in there, and those uh, who were in and who don't trade, they're in for like long-term investments. Let's say they're gonna want to play this level, or even traders are always gonna want to play these levels that were lost, especially when they're this significant. So let's say the stock's at 30 bucks right now. All these people who are in up here are fucking shitting their pants. They're about to cut their losses even. I don't know what they're thinking. And they're basically panicking. Then the stock gets a rally of 30 bucks. Well, like, I'm just predicting this, but I'm not saying it's going to happen. But, like, here, jumps up. All this was distribution got destroyed after. Held what the lows gained over here and pushed back up, but you can see that the consolidation was at a lower level than all this distribution up here. So it's kind of like on a bigger scale, these highs lost are now the resistance. So yeah, you want to look for these targets as these uh, distribution and accumulation levels as targets for when you're trading, because let's say the long-term investors who saw it come all the way down here and now they have a chance to get out at even, that's where they're gonna have to make their decision. It's like now or never type thing. So that's what that's how I look for some. That's why I'm bullish on Canopy in general. But so now it started downtrending. It's in a like a falling wedge looking thing over here, and then just got fucking destroyed on earnings. Like I'm really happy I never played this bottom here, probably because uh, I wasn't down to hold through earnings. But as you can see, the low here, consolidated lower, breakout, lost, got rejected at what the highs lost here, and just got destroyed down here. Um, So when I was looking at this, you look at every day individually, and you can't make a trade when it's in like one of these first candles. Like you just can't. You need to wait till the chart tells you something. The stock will usually not move unless the chart is set up to. Like it just means that if it's set up, it just means that the market makers were accumulating. It's set up for a reason. Set up because people were buying those sellers out, and it will move back up. That's why the chart sets up. It's not just because the lines work. It's for reasons. So we called this low in the chat the day before. It was, I think, yeah, this was the day of the bottom. I called this low here, saying that because we had another bearish day after all of this. Like it was just getting like too extended for me, and I was like, okay, time to catch this falling knife. So it had a really bearish day after all this, and then this morning it gapped down. I called that we were in this hourly channel here, and I said that 30 the low would probably be between 30.50 and 29.50. I'll show you why I said that in a minute, but basically just bounced off our entry target, broke out of the channel, retested the channel, and the consolidation levels that were gained here, pushes back up, consolidations that were gained here, hold, push back up. Now we're in a fucking serious bear flag, honestly. We're probably gonna want to force this lower for now, but it really depends. I'm guessing, like I'm really guessing, get some support uh, around here. Low $32 should really hold, in my opinion. Or else all this fucking work was for nothing, which I highly doubt. It's not just retail buying this dip, you know. So I was watching this whole move up. Sorry, I was in this whole move up. I'll show you my exact entry. But so basically, before the night before this morning happened, I was looking at these levels. Like, so what I see is this is the big, it's a bull flag, honestly, that it was consolidating in and caused this huge move, caused the new highs. So when I look here, you could have easily bought somewhere around here as it gapped down into that level. Like you would expect it to hold, and it kind of did for a day. You would expect these lows they were gained. This gained higher. This should gain higher type thing. So it did have a rally, but clearly wasn't enough. Once again, I'm happy I didn't play that. So then broke these lows even, and so now we're looking for a new target. So this is the bull flag that started the whole thing, and it gapped up from that breakout. This is the only time I really care about gaps, is because it broke out from this level. It might want to retest what it broke out from, what that gained, you know, what caused this whole fucking run, or it might want to retest it just to reaffirm the buy thesis. So that's why I had these levels. The gap there caused the whole breakout. That's why I cared. And it gapped down that morning. Like, it was just perfect. I'm gonna try to find my exact entry. Yeah. 5 minute time frame. I always look at the 5 minute when I'm looking for an entry or exit. So I don't just buy, like, what I don't always just buy by setting bids, and unless I'm really confident. Um, but so I waited here. I didn't just set a bid. It gapped down, got bought up very aggressively. So from 330 to 31.80, so exactly $1.50 off the low, which is 5%. It's not like, you know, it's something. Then pulls all the way back. I see it make this low here. Shit. I'm gonna go in the 1 minute. Let's go. 3 minute. So this is the low. This was also my level that it has been holding, so very important. Oops. So here you see it jumps 150 off that bottom that was a very significant level, pulls back, hits a bounce on what was gained here. So basically it accumulated for a couple minutes. It pushes up and then like this is where it wanted to retest. Doesn't always mean it's gonna like, test the exact level, but it happens more often than not, honestly. So it held this level, pushes back up, retests this level again, double bottom. This is exactly where I entered because it was holding here, but like I was just watching the price and it was like it wasn't moving, and it was just like it looked like it was gonna have a move. So I took a position at 30.90, 30 bucks 90 cents, and actually it might have been here, it might have been right here, like a higher high type thing. It barely, but you know, by 2 cents it had a higher high here, then caused another breakout by a few cents higher high. I wasn't really looking at that, but I saw a double bottom. I think I had a stop loss at a new low of day, which was probably a 1% to 2% risk. I was risking 2% on this trade, and it held, caused a huge rally to new highs. At this point, I was already up over 5%. New highs of the move, and so yeah, that's how I got my entry. And then I was watching this. Here's the hourly. These levels gained, retested here. Levels gained, retested. So this, I was in the clear the whole time. My stop loss was under what the lows gained, so I was good. Then here, broke out of here. I think I raised my stop loss here also to like 31 something. Can't remember, but broke out again. And then here, I think it was here, I saw like I was getting worried here because we were testing this low, this high that was lost, and like I think there was a bearish divergence. Can't really see it on the 1 hour, maybe on the smaller time frames, but I was a little nervous here. I think I took profits right here. Yeah, I did. I was watching this bull flag, like it's a little bull flag up here, and I set my stop under here, which is this level that we regained. So I put my stop at 36. It was at 36.75. Yeah, so I got stopped out here, retested the exact level I got stopped out at, rejected again, ended up pushing back higher. Here I saw this bearish divergence on these highs. Like this is what a rising wedge actually looks like. You know, uh, yeah, a rising wedge here. This is, like I said, one of my favorite patterns. It's one of the strongest reversals. Three highs, well, one, two, three bearish divergences. Like the momentum is going to be downward and hard for until it finds the levels, the key level. Not sure where it's going to be. Maybe here. Something we just have to watch for. But that's where we're at right now. To talk a little bit more about wedges, falling wedges, rising wedges. This is a falling wedge from this fucking disgusting high, 77 bucks to 34, 35. More, yeah, that's more than a 50% retrace. And so what you're looking for is like the way it's going down. What are the patterns when it's going down? You know, here a big dump, a significant rally over 10%. Another big dump, even more significant rally, retested with the highs lost, then got a really big dump, gap left open here just to keep note of. Every time it hits a new low, it rallies. You know, this is something you look for if it has strength or not. If it hits a new low and rallies significantly, that means like People are trading this, yes, and they're selling, buying, selling, but people accumulating. Market makers are accumulating. And to verify that you're correct, you just have to look at the RSI, in my opinion, or MACD, whatever. You know, these three lows are where the lines hit here. The most significant lows, and they're all it's a bullish divergence on every single one of them. That just means as price goes lower to a new low, the buyers come in stronger every time. So here is just like pretty much your buy signal. If you want to just set a bid and get filled on the trend line, the downtrend line, or and predict a squeeze up, or you could buy breaks out here, the RSI, and retests. It's the same situation here, retesting with the lows gained. So this is a falling wedge. We're gonna go through a lot of charts really quickly. ACB at the same exact time as the canopy. This is that falling wedge that happened. Here we're in just a fucking broken channel. Should bounce, I think. Retesting, oh fuck. I don't know. Net, this is just a fucking amazing chart. These are the ones that you want to play because the chart clearly is what works the stock. Like this you could forget about for now. But now basically if a stock has good volume, it's a stock in play. If it doesn't consolidate for too long, or if it's always moving basically up and down, it's a stock in play. So here we have a channel type wedge, if you want. It's more of a channel. Breaks out, forms like a very nice clean falling wedge. No bullish divergence, but you see that these lows are getting rallies. Fills the gap at what was gained, pushes back up, goes for a higher high. Here is your signal to sell right off the bat. It's just jumped 340 to 670, so almost a double, pretty much a double, and a bearish divergence on the RSI. You take that sell. And where would it confirm that it's going lower? This is the consolidation, and it has a trend line here, and it fails. It retests, they can't get over it, so it fails. People are taking profits. That just means this is distribution, this was accumulation, this is accumulation again, falling wedge, push back up, more distribution for a while because they wanted to fill this gap, fill the gap, push back up, some bearish divergences on these highs. That's why I wanted to retest. Then they got some news. I think it was, I forgot, it was like earnings or a license or something. Consolidates here, but didn't quite like get the level I wanted to. That's why I got rejected here again, or maybe because it went up too fast. I don't know. But had a trend line, popped. Just looks very bearish when things go up super fast like that. That's another thing I want to point out. Same canopy. When you see like extreme candles like this, where it's non-stop short. This is a short squeeze, and it's non-stop. It happens within weeks. That's just like right away when that's happening. You know that you need to take profit on this move, always. As soon as this fails, just take your profits. Like it's a no-brainer, really a no-brainer. Like every time all this, it needs to retest everything that that it started for, you know? Comes all the way back here again. A huge move happened quickly, came all the way back. Huge move happened too quickly. All kinds of distribution, they abused it, brought it all the way back down. Huge move up, all kinds of distribution. Same thing for when things go down though. The faster it goes down, the quicker it'll move back up. Let me show you one of my falling knife buys with nothing to the left. Still actually very nice. I have an uptrend starting. So when things go down this fast, you see, it goes down within 2 weeks. I lost like I don't know, 30%. Rallies back up very strongly, very quickly, goes back down very quickly, goes up, goes down very quickly, goes up very quickly, down, up, you know. When things move quickly, they could reverse quickly, so that's basically what I'm saying. And when you see them move quickly, that's when you need to make your decision to sell or not. So I bought down here, by the way, like nothing to the left and just a reversal play. Like I just saw a lot of volume coming in. I think I bought like I bought at the actual low 407 or something. That's fucking nuts. I held the whole move. I sold some here. I sold some. Can't remember. On this breakdown, I think it was. It was like looking a lot like distribution. You see the RSI price divergences. It was hitting the downtrend line. So a lot of reasons to not want to be in this at this price. We just caught a 50% move. Like take your profits always. So I avoided this whole leg down. Retested the exact, well, not the exact. I was actually calling for this level 437. Didn't miss it by 2 cents. Like I was bidding there too. Pretty pissed I didn't get filled, but still looks good honestly. Um, so this is an example of extended legs up and down. Um, so yeah, let's go through a bunch of charts really quickly. C-Web. This is the huge the IPO levels that were accumulated. This is where the main shares were traded at this point. Caused a huge rally. At this point, everyone loves the stock because of the huge moves. And because it ran up too fast, once again, it always retests. When it goes up too fast, just fucking sell. So, retested the whole fucking move. I had drawn this out the night before. It was down here. It was extreme oversold. It was like I just had two disgusting red days, and I called it this day. I was bidding at 15 10 or something, and the price was at like 15.15. I missed it by 5 cents and fucking missed this whole. It was a double, literally a double. What this was a huge retracement of a massive move. Retested what these lows gained, and it was a falling wedge pattern, my favorite, and just broke out. It was just nuts, you know. Say you're in this breakout, you just set your stop under the recent lows, and like every time here, held with a gain. That's why it moves back up. Held with a gain, move back up. Held, move, held, should move. THC is fucking nuts. Hope everyone made money on this. We all caught the perfect entries, well, most of us. Huge long-term falling wedge. Falling wedge is just, it's a huge sign of accumulation for me, especially when the indicators are up. They're supporting your thesis. So I see all this. It always gets rallies because it's so close to a short squeeze at all times. Like All it needs is volume, and it would move, but there's just not enough at all these times for it to move. So anyway, um, cut the exact low, 14 cents to 22. Where do we bounce on the gap? We had a gap on the daily chart. This is the IPO level, 14 fucking cents. We got some bids there. Rally to 22.50. That's, I think, uh, almost 50%. Can I fucking abuse this stock? I called this a long, long time ago. Massive, massive falling wedge. I was in the stock for a lot of these levels when it was one of the only stocks that I was kind of invested in because I knew it was undervalued at the time, and I just saw the accumulation, like the market makers. I just saw their move coming. Um, so huge falling wedge, broke out very strongly, like divergences on the lows. Huge one here on a double bottom, which is where I averaged down to. This is my main money maker this year, as you can see. Like, it was just a perfect move. You if you had a proper stop loss under everything that was gained, you held the entire move and fucking banked. So where I saw that it was a sell signal, um, head and shoulder top. Once again, it just went 15 cents to 75. I don't even know uh, how much percent that is, like 300, 400%. I don't know, but crazy. You just gotta expect to take profits. So there's a shoulder here, higher high, and then shoulder at what was lost up here. This is your neckline. It's your trend line that was holding, or even this support beam is your neckline. Fails under another head and shoulders. It bounced off this low that was gained. Heads higher. Head and shoulders is here. This was like a funnel type thing that I saw. I traded it again from here to here. I also traded this bottom from here to like here. I sold really early. Traded this. It was a higher low with a nice divergence. I missed the top, but sold around here most of it, and then sold on the breakdown. 39 cents for the rest. Um, Look at Disney. Look at this daily chart or weekly. A 5-year consolidation. It's a ascending triangle. I'm kicking myself for not fucking holding this, but I was watching this breakout. Me and Popeye he's my friend, by the way, and we were watching this very closely. And so this was the dump before the huge move. So we were watching this and saw like big volume. No, actually, no, sorry, it was right here. Sorry. Um, so here, either way, it retested the wedge as support and it held. Retested, held. So it's strong here. And then all of a sudden, we saw a huge fucking dump on no news, and it just like it was huge volume. Like, it was just like so weird. So I was very interested. I bought calls over here. Um, I bought only one contract. I forgot what price they were at, but I bought only one contract. Saw this huge move coming. Like, I was in it. Sold at 116. I think I was up like 200 or 300% on my calls. It ended up fucking gapping up to 140s. the calls went to like, oh, I would have been up 40,000%, 40 bags could have made. Didn't happen, but just a nice learning experience. It looks like honestly head and shoulders here. Like these lows, these highs are getting sold off, as you can see for now. See if things change, but shoulder, head, shoulder, um, Roku, fucking disgusting. All call ahead of time. This is what we saw. Bearish divergences on the highs. It's in this channel. That's the levels to watch for. This was even shown before to predict what it would kind of look like. It happened. Even when it bounced here, I said, okay, I might get a dead cat bounce. It bounced from 140 to 150, $10. Then dumped even further. Like, I'm fucking kicking myself for this one, even more than Disney, because I didn't catch any of it. I was focused on other things, and I really missed this fucking rejection. It sold off here, came back to retest, and just got destroyed from there. I'm really fucking mad I didn't catch that one. But next, um, like fucking disgusting. I also called. It was intraday yesterday. It was at 104, 105, and he said you'll at least get 110. It bounced to 110 because it's just too extended on the downside now. It might even rally. So that's Roku. What else? Labs. Overall, I'm pretty neutral on this stock because it's consolidating nicely. It's holding higher lows. Um, I was bearish up here for sure. You know, bearish divergences. It's always there on the higher high, on bearish tops. You know, so always look for that. Where did I play it? I played this dump after earnings, just because it was extended and it gapped down after the dump. You know, when it's already extended downside and then it dumps even further, you know, it's something I kind of like to play. So I bought in at exactly the oh no, sorry, once again, I did not play this. I haven't played the stock until here. Um, so this is a massive accumulation breakout before earnings. Um, this is the level. This is like, let's say your pull flag ascending triangle. This is the breakout level that it wants to retest, and it usually bounces on first touch. Second touch is where you don't want to really play it. So retested my box here, had a stop loss like right under the box. Got it from 570 to 620, I think I sold. So 50 cents I caught, and I sold because I saw the exact same thing I saw last time, which is a gap down. There was also a gap here. Doji, which is indecision, fill the gap, and then just dump even more. Like as you can see here, go for new lows. This is exactly what happened. Like fucking 620 to 420. That's 33%. I even called it on Twitter. All those labs, fanatics, you know, nobody trusts the chart. It's their problem. I know Dafster and a few other people fucking killed it. Sold these tops. Fucking good for you guys. Seriously. Now this is the low, the previous low. This low held. It was gained. This low held again. Now it's kind of looking like it's going down again. Maybe people are selling the news, the licensed news. I don't know. Maybe it could go. It could finally go for this 350, honestly. But it also is holding higher lows on the RSI too. It's holding higher lows for now, so it's okay for now. And I just show you the next time I played it. So we played this from here to here. Then we played this. This is like extreme oversold, so 730 to 420 again. That's 35-40%. The exact tick was on the exact low that was gained, like to the T. I didn't have that line outlined because I was in on this day, so I was watching these levels. This is the next day. But here was the trade. Show it. So it dumped here after a lot of consolidation, some nice moves up even. Rallied from 487 to 530. I also called this. Anyway, a nice floor was established here that ended up breaking down. I think it was the day Canopy was dumping like crazy, so it was forced by other events. I like to look at that too, like what the market's doing in that day, what the big stocks are doing. You know, if the big stocks are ripping and this one's going oversold, you might want to buy this one. But that wasn't the case. Both were dumping. This one was just extended because it was dumping from previously also. So I was watching this. I saw some good volume coming in on the lows, some strong accumulation on the RSI. Um, I bought this retest here, 440, held kind of higher highs. You know, you could draw a trend line with higher highs, and I had set a stop here, 438 or something. But then I saw it gapping down in the morning because of Canopy. This is the day Canopy went for the low. And I said, okay, fuck this stop loss. I'm going to remove it for now. I'm going to wait till it finds any low, and then I'll set a stop loss under that. I was going to risk a bit more, which sometimes you get caught, but I just took the risk. And because I was so bullish on it over here, and I sold at 487, which is like these. When I put these lines, everything that's on this chart, I put when we were at the lows down here, so I was watching which levels to look for. And if you just zoom out, this was all there ahead of time. Look at these reactions, like non-stop. Here, a massive move. Keep in mind this is too quick and went up too fast. You might want to retest. So keeps retesting, keeps holding. You know, right at resistance. Fucking perfect sell. Support held non-stop. Next level, and here we finally retested that 450, which is why I called it a buy again to the people who asked me. Um, it was like kind of a no-brainer buy. Um, right on what we gained. Because it went up too fast, I told you it's gonna want to retest. So a nice fucking 10% rally again. Sorry for all my swearing, but these levels are just like textbook rejections, and moves over them, you know. So just cool to see. KHRN played this many times, mostly for a profit. Uh, Bullish divergence here. It's pretty strong. I really don't think it's gonna go lower, but it's anything's possible. You know, 120s would be fucking nice. Low 120s if it's going for a new low, but I'm not sure about that. Played it. I missed this one. Missed this one. Played this one right on these lows. It was just too extended on this week, and it was already extended. So you know these relief rallies happen. You just need to know. You just need to be aware of if it's just a relief rally or a dead cat bounce or a real bounce. It'll be a real reversal. And the way to make sure you don't get caught in the case where it's just going lower is you need to raise your stop loss all the time, or just take profits if you're confident that it might go lower. Like say here came all the way back in, there's resistance here, big resistance. Even here again, held a higher low, got a lower high, so that's bearish. And then lower low, bearish. Came all the way back here. Anyway, played this a few times for oversold bounces. Um, Key guard. This I'm fucking good at this stock. I was watching this down here. He never played it up here at all. Um, I just saw a huge accumulation down here, and they see that this one day caused a 50% rally in a day. So you know that this range, these new lows, are dominated by bulls. Because if they're displaying this power, that means it's their level. So I was watching these bullish divergence on these lows, and it's when canopy and all the others start to bounce too. So it had sector momentum. So I bought in on this low. It was like 247 or something. I bought in here. My stop loss was probably very tight. It broke out, came back again. I think I bought more here. Broke out again. I sold this rip. Actually, no, yeah, I didn't buy more. I sold here as a retested resistance, and I rebought on the sport retest because it just went up too quickly, and it was just, I think canopy was sliding. I don't know. Probably I had some reasons to sell, and I took it. And I remember rebuying here. Sold this rip also as we were retesting the downtrend we have here, and rebought on this 307. I swear to God, I got 307 as an entry, and it took like 306 before rallying to 5 something. I caught this whole move, well, most of the move. I'm trying to remember where I stopped out. I missed this. I think it was here. Or mid fours. So I still caught a 50% move. I remember catching 50%. I missed the top, but really, those tops were even more of a sell. So if I would have held, I would have fucking sold it again. So went up very quickly. Retested everything very slowly. Slow bleeds is how they do it on retest. Sometimes actually it's quick bleed, very quick. We played this bottom here from 270, I think I bought in 273 or something like that, and I sold as we retested these levels. I think it was 310. Yeah, 310. I sold. I got over 10%. I was happy. Took it. Didn't trade any of this here on when was this? Wednesday. I was trying to play this bottom. I'll show you. I got them stopped out over here. No, sorry. Over here, I thought this would be bottom. There was like a lower bullish divergence. I took some with a stop loss. Got stopped out right here, 239. I lost 4 cents. Nothing huge at all. So I see this bullish divergence. This is where I got interested, and this level was the low of day, 224, caused a rally to 240. So I was interested. There was some strong like display of power there. So lower low rallies to the same high, then retests. No, sorry, no, yeah, 224 was where I was looking at. So it reclaimed 224. It went for a lower low, then reclaimed 224, and then retested it. This was like I was watching right here. The price was right at 224, and I was watching it. 2 seconds later, they slapped the ask at 225. So I started bidding. bid for a lot at 225. Was gonna stop out at 223. I was really super tight here, but I was really assuming this 224 was gonna hold. So I was bidding at 225. I was first in line all day. At this point, nobody fucking sold down to me. Went up, retested, didn't get 225, and missed a 20 something percent move. Whatever. Next. But these are the reversals I'd love to play because they're going to be big reversals. If they go down that fast, they could go up that fast. After extremely fucking parabolic downtrend. That's why we bought about a 40% gap up. I always sell gap ups. Looks really good again. Double bottom could be holding higher lows. I think we're gonna go up from here, but it all depends on canopy. One thing to I'm almost at the end of this video, but one thing to keep in mind is stocks tend to reverse on the max pain scenarios. So when things get really oversold to those extreme levels, this is Tesla. It's a falling wedge, which is bullish. People were accumulating on this wedge, and at some point it just fucking falls through. Gets extreme oversold, max pain scenarios. RSI's at fucking 20 on a big stock like this. So this is where I get interested again. Rally from 180 to 260. That's 50%. Pretty fucking nuts. Max pain scenarios. There's also the max pain for shorts. Let's say you're short and you're shorting down here, and then they're squeezing you, and you this is shorts constantly taking profits, and they look at this level. This is unedited also. This level that was once a base, now a resistance. This is max pain. Max pain on what was lost for shorts. So sorry, for longs. Yeah, for longs. So then they squeeze them back down and whatever. Interesting to note, talking about max pain scenarios. This is a long-term chart on Tesla. It's fucking interesting to me. See how, whatever, this is not important. Breaks out, has a huge range, and all these tops are fucking bearish. Like, look at the divergences too, and the swings back down are like very concerning. So pretty bearish. So when you see it breaks down like it should have down here. It breaks down because these tops are just too bearish, even higher highs too, or over here anyway. So you see it dumps, gets oversold to the max pain, well, temporary max pain. Like if it's oversold that fast, that's max pain basically. If it's going slowly, they're just distributing it slowly. But if it's quick like this, it's a stock in play. So max pain is exactly what these highs gained. Well, not exactly, but this is what was gained. And it's what was held. So fucking long-term chart looks like it was gonna fucking die here. The stock looked like it was gonna die, but Tesla's a heavily shorted stock, so you gotta assume that these shorts are abusing these and they want to do this. But longs they come in actually extremely strong on every fucking move, as you can see, because they're just squeezing. It's long versus short squeezes all the time. This is what I like to trade. So retest here, short squeeze, and this is what actually caused new highs. This max pain scenario gives it that fuel. They're liquidating all the people who were the weak hands, and they have all this fuel now. Like even the longs are going to be rebuying. They got faked the fuck out, and they're going to be rebuying. That's how things squeeze up that fast. And now again, we have all this consolidation, and we dump extremely to this low that was gained. Yes, you could argue that this is another low that was gained. It should have went there, but this is where it was. This is where it happened. This low right here. Honestly, I'm fucking. It could for the next year. This thing could uptrend just like here. It might play out a wedge like this, and it could fucking go to new highs just because it went for this max pain scenario. So to end off, I'm gonna show you a fucking bunch of shit stocks that you never want to get caught in, and this is why I always use a stop loss. Assume everything is going to zero. I swear to God, I used to play this stock. I was in it when I was a fucking investor, like an idiot. Got caught, lost so much money. This is why I learned the things I learned today. So, fucking disgusting chart. It's just a slow bleed. When these things pop, you just need to sell. Like every single time it pops, just sell. If it's a shit stock and you're stuck in it. So I'm gonna show you a bunch of shitters to scare you, and yeah, just watch the fuck out for what you buy. DM, look at this fucking piece of shit. They had so much good news though, but you have government contracts, yeah, all of that shit. Look what the chart says. Fuck off. Tilt. Constant stock in play. It cannot stay in one fucking level. It needs to be moving all the time because the demand is so extreme on the downside. It must be all the cheap paper, but these lows get rallies all the time, which I'm expecting a rally, but I'm not sure about it. Could go for lower lows first. But this is another stock, like, if you don't sell these highs, it's like someone's gonna sell them before you, and it's gonna go lower, and you're gonna have to sell the next high. When these things rally and retest resistance, that's where you need to make your decision. Get out of these fucking shit stocks. Take your stop loss. Ian, not exactly a shit stock, but these swings are fucking shitty. Like, it's either up or down on the stock. There's no in between. And there's so much retail in this stock that it could go on forever. CXXI, not enough volume on this stock. The only time there was volume is when it was being pumped on Twitter, which is fucking terrible. That means all these people who were buying up here while there was volume are gonna be selling when there's no volume. So just imagine how long that can take to bleed out. CXXI fucking retraced the whole thing, liquidated people at a new low. For sure, panic sellers were in there. Probably that's what triggered the stop losses to 55 cents. Um, Here, ST. I tried trading it once. Up here. I don't even know. Tried trading it once. Thank God I sold. That's all I can say. Traded it again at the bottom. What I saw was just higher low and nice consolidation and a breakout. I actually bought the breakout with a stop. Super tight stop. I was risking 2 cents. Like, those are the trades I'm willing to risk in a shit stock like this because it put in a bottom here, it broke out, then needs to find a resistance at what it lost. This is the only floor there is. This one here, which is 215, which is my main target, and this one here, which is $2, where I consolidated that day. And yeah, I got fucking rejected right there. So and got rejected plenty of times in here too. Like, your opportunities are there. Here, bearish gap downs like this are fucking powerful. You need to watch out when something gaps down like this. If it's closing bearish, like sometimes even though you're down like 30% in a day, 20%, I mean, just really you gotta make your decision. You can hold it and wait, sell the balance, which is what I sometimes do if I get caught. But fucking be careful for power gap downs. Here's a real cool an example of power gap up. Or actually here, like, here's a power gap down. It's dumping, dumping, then earnings, massive gap down, and it's continued from 51 to 30 to 25, 50% retrace from that gap down. Huge. Here is a power gap up. It's in all this, or even here. It's in this consolidation, power gap up, and it has like, it's a short squeeze. That's what it is. That's all it is. It's market makers fucking around with longs and shorts. 70 bucks here, gap up, causes huge moves, gap up, huge move, gap down, just do the same thing. If you remember Afria, look at this gap down here. I remember watching this. I think I was in it around. I tried trading it here, fucked up, took a loss. Traded it here, got a huge win. I traded this whole thing actually. This whole rising wedge, it broke up from the rising wedge, which was very bullish, but that's what gave it that big rally. But after that, it was just too extended. A lot of distribution before earnings, a huge dump on earnings, power gap down, just as here. Power gap downs, you really need to watch out. Try to sell and buy in cheaper if you have to. Like 12 bucks back to 660, almost 50%. Technically, this is a bullish power earnings gap, but this is why I'm bullish on mainly because this recent consolidation is all off a bullish pattern, so I like it. Hive, some more shitters. Look at that chart. Just fucking sell the rips when you're caught. Use this fucking stop loss mainly. AZ. Disgusting. Okay, well, I think I'm gonna cut it here. We're at an hour and a half. It's good enough for a start, I think. First time ever doing one of these. I think it came out pretty successful. Um, I hope you guys enjoyed it. Hope you guys learned something. Hope you guys watched the whole thing. Also, because it's a lot of information in here. Um, Let me know for the next time. I will be doing one in the future, obviously. But let me know if you have any other questions. Feel free to contact me. Just message me or whatever. I'm happy to help. Just yeah, that's about it. If you have any other questions for the next videos, maybe let me know. I'll keep them in mind. Uh, other than that. We're in a scary time with SPY. Long-term chart. Here's my chart, by the way. We're in a massive megaphone. All these highs are bearish. Like, you can draw a trend line here. I really understand why Maple's so bearish. It makes so much sense. Just I'm too scared to play the exact high right now. Because short term, it's in the short squeeze. So yeah, long term, I'm fucking scared also. Like, could easily go for these lows. This is when Trump was elected, 210. Could easily go for that, like, in short term. That's why I'm just scared in general. for the market. So it's nothing to joke around about either, because it could happen any day at these highs. Like, you really got to be careful every day. You don't want to be buying huge positions right now, long. But might want to retest 294 before, if it wants to go for new highs. Trump could do it. Not saying he won't, but you know, not a good look to it. Anyway, it was nice doing this video. Like I said, let me know if you have any other questions. Happy to help. Smash some trades and make some money. And yeah, that's about it. Enjoy the rest of your days. Peace out.